Welcome to our weekend edition of our market analysis. I hope everyone is having a great weekend. This analysis is for the weekend of November 15th, 2025. Well, it was a very interesting week last week. When you look at the surface, it looks like nothing happened. The markets were flat, but a lot were happening under the surface. For me, the market looks a little heavy. We talked about it a couple of weeks ago. And there's something called buy the rumor and sell the news. And if you noticed last Friday, we saw that there was a reversal early to middle of the day in the markets, and somebody knew that, well, there is this agreement that the government will be open. So, well, what happened? The government did open, and as soon as it opened, we had actually selling in the market. So this was the longest shutdown of the U.S. government, over 42 days. And now the real work begins, the effects of what had happened, but also we have a lot of uh, government statistics, which they either going to miss it or they're going to not going to be too accurate. So that brings me to the second point. We had over five Fed members speaking around, and um, they all sounded hawkish. Most of them actually sounded hawkish in a sense that they weren't sure that this December um, rate cut is going to happen. So consequently, what has happened, we have gone from just a few weeks ago of 100% rate cut in December to 50%. And even Chairman Powell had said, well, we are in a dark room. So, we got to walk very slowly. So that could explain the little sell off. Also, there's concerns about inflation, which I will go over in the next couple of slides, and the softening of employment. Last week, I shared with you about what the private employment numbers ADP is telling us, and then also what is happening with the layoffs. And there are concerns, especially if you are a recent college graduate. It has been a very challenging markets, and that's we also look at. So the markets are also concerned for that. This Wednesday, we will have the FOMC meeting minutes. So we want to see what they were thinking of in the last rate cut. Finally, we have some government numbers coming up. This is a non-farm payroll, the non-farm employment. It will be out actually on Thursday rather than Friday. So again, there's a lot of obviously missing points because of the government shutdown. So we'll see what they have to say and how the Fed is going to react. A big news for this coming week, besides the non-farm payroll, is and it's in Nvidia's earning, and that's of course not being the biggest company in the world is coming up with their earnings, so the markets do pay attention. As a matter of fact, one of the concerns for the market is, are we overhyped at this moment with the uh, AI issues, and are we ahead of ourselves? So with the construction and other things, so it's getting very expensive. So those are the things the markets are concerned. The last but not least is two things I will focus on the charts. One will be Bitcoin. What is happening to Bitcoin? Is it telling us something? Or is this really just a risk off at this moment? And then also with natural gas, with again, a colder than expected winter it's been helping natural gas, but where are we right now? Is it a good time to get in, or should we look for a better opportunities? With that in mind, let's look at first of all what is happening with the job cuts. Well, the Challenger report came out and told us that in October 2025, it was the highest tally as far as job cuts go uh, for the October since 2003. three. Now, warehousing and technology were among the hardest hit. They were down, well, the cuts were 47,878 and 33,281. So that's one concern. Again, I mentioned about especially our younger generation, especially 20 to 24 being affected. Um, One thing also for next week, as I mentioned, we have the FOMC meeting, the FOMC meeting minutes coming out on Wednesday. And then on Thursday, we have the average hourly earnings, non-farm employment change, and unemployment. So we'll see how the analysis is going to go with that. Again, that's 5:30 Pacific Coast time, 8:30 East Coast time, and 7:30 Central time. Speaking of that, again, they are very careful. This was done study by the Crescat Capital and using Bloomberg information. They went and looked back to 1967 and 1983, which is this is the red as far as the inflation numbers, and looked at the waves. And what they did, they transferred from 2015 to present, and this was done on 8 as of 8/21/25. Now the markets don't repeat, but they do rhyme. So what they are saying is you can see how we have actually have had a similar pattern, and is it possible that we are going to go and test the third wave, which is that means is there another big inflation wave ahead of us? Only time will tell, but this is something that they're seeing the similarities uh, with the past, and also concerns about the money supply at new highs, and the dollar has been weakening for different reasons. The fiscal deficit, of course, and then we've talked about President Trump's big beautiful bill, and with the Fed lower rates, which of course affects the inflation. So we'll see what happens. That's I just want to share this little history with you. As far as the rates go, what we see here is you see this is the rates right now, and every maturity we are ahead of where we were a month ago in October. So we'll see the rates have snuck out. Again, this is after the last Fed's rate cuts. So, what kind of a week would we have? Well, it was pretty flattish when you look at under the surface. When you look at the overall market, they were negative 0.15%. But there were a lot going on. There's some rotation. Technology took the bigger burden. Nasdaq was down 0.45%. Dow was on fire, and then last couple of days it kind of cooled off. I was up 0.34%, and S&P really nothing, pretty flat. As a matter of fact, you can see the Dow on Wednesday hit all-time high, passed that 48,000 magic number, and it's since then it's down 2.29%. S&P still holding that October 28 all-time high, down 2.28%, and NASDAQ is holding 29 October highs. Oh, it's down almost 4.5%. As far as commodities, they're all positive. Gold had a rebound, it's up 2%, copper almost 2%, and crude oil pretty flat, right under $60. As you can see, the big caps, they were they were up. The value was positive, but not much, 0.12%. But we see the small cap and mid cap growth were the biggest losers. As far as the indices, what we see, and you will see this pattern, and we will discuss it, how the Dow has held that 50-day moving average. What we saw on Friday, this is last Friday, went down, reversed. We did the same thing again on this Friday, went below that 50-day moving average and reversed. The same thing happened in NASDAQ. The same thing happened in Wilshire 5000. What you can see is these are dojis, and you see again big tails, reversals. Um, the yields, on the other hand, have been going up again since that Fed rate cut, and we hit the 20 and 50-day and bounced back. And then the dollar had been strong with the initial rate increase has been going up, and then we've had a little sell-off, but we are right on that 20-day moving average. The commodity index also is above its 20 and 50-day moving average. Crude oil pretty flat, consolidating is under its 20 and 50-day moving average. Gold is hugging its that 20-day moving average, but above its 50-day. We'll discuss it a little more in the ETF and the trade of the week. VIX all over. We'll discuss that when we analyze VIX. And then advanced decline line, New York advanced decline line, you see the last 2 days, we were on the negative side. So as far as the sectors go, I decided to use the relative strength index, the RSI. So we go from the strongest in the last 2 months relative itself, really. And we see the healthcare. This is not just a rotation. There are some strength, underlying strength, especially in the biotech, for instance. And we see this big movement. So they've been highest RSI and strongest energy has come alive. And they were positive again this week. On the other hand, well, the S&P, as we mentioned, went below its 50 and came back. We've been with all the weaknesses in the staples and defensive sector, what we said they have been revived in the last few days, but they're still a challenge above their 20-day moving average. Also, technology, we see is the AI getting a little tired. So they had a sell-off, but similar to, again, to NASDAQ, you see went below 50, came back. We see that in the material. We see financials below their 50, and now it's below 20. Utilities are holding their 50-day moving average, but that's been distribution. We are below the 20. Real estate, again, looking at the rates, they are below the 20 and 50. Industrial, similar, the 20 and 50 below that. And discretionary, not a very good day. We see it's a big sell-off on Thursday, and we are below the 20 and 50. One of the culprits for the cyclical or discretionary were the automakers, auto manufacturers, from Tesla, which was down about over 5% for the week, to NIO and Lucid. We're talking about 10 to 17%. So they were a part of the sell-off in the XLY. And then we have the communications, which has been, we all just had a death cross of the 20 cross the 50-day, and they're below that. So we do have some good pocket of strength, though, internationally. What we see, look at Brazil. This is, again, using RSI, Brazil, Hong Kong. We look at Belgium and Spain and Switzerland. They're all nicely above their 20 and 50-day moving average. On the weaker side, we see Australia, Germany, and Sweden. They are all below their 20 and 50-day moving average. So what is happening with the sentiment? Just the 2 weeks prior, on October 29, we were at 44% bulls for AAI, American Association Individual Investors, and now we're at 31.8. That's almost 12.5% swing. On the other hand, we went from 36.9, which was above average in bears anyway, but we are at 49.1. So there are nervousness. Of course, this is just the day that the government shutdown had ended, and it's interesting how the survey went. But also we see that in CNN fear and greed. Last week we were at extreme fear, and today, or this week, we are at extreme fear again. So there are concerns. One thing you have to also remember, November, although is a positive month, the second half of November generally gets a little softer. So just be aware of that. And But this Citigroup panic euphoria, it's in its own world. They are at 0.79 in market sentiment at a euphoria. Also, this delta market sentiment, we talked about this last week again. We went to negative zone below that 50%, and we are at 46.7. So it's giving us warning signs here too. So let's take a look at the charts and see what is going on when we look at the moving averages. This is the S&P cash, and we see how nicely we held that 50-day moving average. This was last Friday. And as we mentioned, we came down and we bounced back, went above the 80 and 21 day. Again, on Wednesday, we find out, well, the government has opened. Oh, let's sell off. So we were down from that point on. And then this is a very interesting one. We use the Fibonacci. I've spoken about this. Whether you believe in technical analysis or not, just remember the programs are out there who do. And what is happening is this 66, 63 zone. So these are, although it looks like exact number, don't look at these lines and absolute numbers. These are zones. So, it could be 10 points higher, 10 points lower. And look what happened a Friday ago. We see this almost like a dragonfly, look a hammer. Um, uh, Basically, we went right to that zone, bounced back. Second time, this is the futures market again. So what we need to do, obviously, this has been holding. Now, what that tells you, once we break below that, that's all the bets are off. So we could have some sell-off continuing. Now, if we go back and break this above barrier at 68.20 area, for instance, then we could have a new leg. So I hope you're paying attention to these zones. When we look at the Bollinger Bands, as we mentioned, we are below the 18-day moving average or 20, but we hit the Bollinger Band. The problem is that the momentum has turned negative on stochastics. We are below that 50, so very close, 49. So let's see if they can hold. On the other hand, you can see how we had a warning sign when we crossed on stochastics and then on MACD, and that was giving us a warning sign. Again, this was around the time that the Fed came out with their rate. So basically, MACD is negative. That's a short term. On a weekly, though, we have been embedded. We've been holding up for the first time now in a few weeks. We got show that overbought, and MACD is very close to crossing. The volatility has come down, but we are again careful. Let's see this week if it doesn't reverse, then we will be overbought and we will go next to that 18-week moving average. And if we break down, we will go to our Bollinger, lower edge of the Bollinger Band. We see that NASDAQ is similar on a daily basis. You see MACD negative, NASDAQ, when we look at stochastics, they are negative as well, but we are holding above 100-day, and we did have this doji, so we'll see if there's room to go back, but we've been in a distribution in NASDAQ. When we look at the weekly, again, similar to S&P, we see that we are overbought. So we want to pay attention, and MACD is right there. It's about to cross. So important week coming up. As far as the Russell, which has been the weaker one, of course, reaction to the rates, just holding about that 100-day moving average. The only thing I can see is there's a little divergence compared to the price. Other than that, it is weaker. We need to actually, I would like to see break above this high of this candle and above the 18-day if we want to be positive on it. So right now, it's just holding its tooth, and it's been a while since we've been there. As far as the weekly, again, we are right on that 18-week moving average, but the momentum has turned negative MACD is just about to turn negative on a weekly basis. The Dow, it just broke below that 18-day moving average. The momentum is down. We are not overbought anymore. We cleared that after hitting the Bollinger Band upper edge, but MACD is all over. So Dow is acting similar to other indices. And then when we look at the transportation, just a sandwich between the 18 and 100-day, momentum down, but still above 50. MACD is about to cross. Look at this VIX. We've been talking about the VIX. It goes, hits that resistance, goes outside the Bollinger Band, came back in. That's why the market had a reversal. And but the momentum is about to turn positive. So we are not out of the woods. This has been telling us. We talked about October, and you can see this is not the end. The same thing with the volatility of VIX. We are look at this huge bands as far as the width goes, and we went consolidated a little bit, and then we are opening again, and momentum is positive. So I would be neutral to cautious at this moment. Again, NVIDIA's earning coming, so that will give us something to see how the AI issues are going to react. But right now, between the yields, the inflation picture, um, the employment picture, and the valuation, so there's a lot going on. Now, what we see, although we are under 100-day moving average with the yields, we've been holding that 100-day moving average. We are overbought. MACD is still positive. So that's one concern. So we want to really go to negative with MACD. So that's not, we want to have a lower yields, obviously. And the opposite is true. We went against the 15-day, 18-day moving average at the 10-year, got rejected, but we are above the 100. So, but the momentum is weak. MACD is negative. The same thing with the 30-year bonds. And then the dollar was behaving well, but where did it go? Went to that resistance around 100, 99.74. We are right about that 18-day moving average, but above the 100, but the momentum is down and we crossed the MACD. Opposite is true with Euro, broken above the 18, momentum is positive, not overbought yet, and MACD is also positive. And here is gold. Gold after the nice sell-off, we've been talking about that. We became oversold, we moved up. Now we are overbought, but we are sandwiched with the Bollinger Band and the 18-day moving average. MACD is pretty flat. The bands are narrowing, so it's signs of consolidation. Silver has acted a little stronger. We are not overbought. We just became embedded. MACD is positive, and we are above the 18-day and 100-day. And volatility is actually has expanded with silver. And copper, actually, volatility has narrowed. We are just hugging that 18-day and above that 100-day. Momentum is pretty flat at this time, and MACD is flat. Well, let's take a look at this Bitcoin. A few weeks ago, I mentioned this 100-day moving average. At that time, you can see the 15-day also was crossing. That 115,000 zone is very important. If you want to be positive about Bitcoin, we have to break that 115,000. The 110,000 zone, about 109 actually, was an important line in the sand. We needed to hold that. Well, as you can see, we have broken. We went to the 18-day and 100-day, got rejected. We tried to come back against the 18-day. So this doesn't bode well. And obviously, it's part of the risk off. The money has been moving. There's a few other things going on with the Bitcoin. And now we are at 94. So we are oversold. So that's one positive thing we can take up. But look at MACD has crossed since, when we hit that 127. And the volatility has expanded. So where are we going to go? On a weekly basis, we are just oversold. MACD is still negative. So, but we need to hold this 90,000 area, which is this is a long term. We've been above that for a while. It's 100 week. So we need to hold that. Even going further, I had uh, shared this before. This is our Fibonacci, and from the low of April to the high, and then we did another most recent one now with extensions. So we see this cluster zone right around 115.5 was a cluster zone, and it was a 50% from the most recent high, and it was at 23.8, and that's where it became a big resistance. And then we had this support around this 108, 109. Again, this ambush zone did not hold. We came down, and then we have another ambush zone, the major ambush zone, and that didn't hold. So we are broken. So again, this 89, 90,000 is important. If we don't hold, then we're looking at about 80,000 as the next step. So, or 79,000, I would say about 80,000. So be careful with that. I'm going to go even further. We're going to look at Hakinashi, and we're going to look at again the weekly Hakinashi. And we see again the MACD had crossed. We are in a squeeze. The loss of momentum, we have been in a squeeze on a weekly, but the momentum has turned negative. We have broken. This is a 50-week moving average. RSI is negative. We need to hold this 50 weeks. If we don't, again, this is on a Hakinashi. You can see it's 100,000. So, but what we need is to hold that. Otherwise, as I mentioned, we could easily go to first 90, and then 80,000 could be next. In order to believe that the reversal is real, we basically have to break above the 100, and I would say 104,000, 103, 4, to get to that 115, and then a real buying will come in at 115,000. Next, we have crude oil. Again, pretty flat. We have a little oversold in the stochastics, and then flat on MACD. Again, there's all these sanctions, and then OPEC had their meeting last Wednesday. Everything on schedule, including non-OPEC. We see there's supplies. So, but also they are very positive actually for GDP growth globally for next year, which is interesting. So they're holding things steady. Now, the winter, it looks like it's going to be colder than expected winter. And based on that, we see a huge move in natural gas. And as a matter of fact, we see we had a squeeze right around here, which will take us right around here. And we fired, and look at this huge move from 2.9 to 4.5 almost. Well, actually above 4.5. So this is a big move. What happened was, what we see, this is again what we are looking at on daily. We had a MACD crossing Hakinashi. This is a Hakinashi chart. We see that the colors changed. We went to that our 50-day moving average, got rejected, but we have a higher high. And then we had another nice bounce, went to the 200 moving average, got rejected, came down right around that 50, broke below that 20, but reversed again, higher high. So, and then we broke this huge bar above the 200. So what do I think about natural gas now? Now that it's the weather is already calculated. Well, RSI is pretty overbought, and looks like a double top here. MACD is again this little weakness, so I would be a little cautious at this moment. I would look for a better opportunity to go in, just at this moment. So there is still strength, but we've had a really huge move. As a matter of fact, when this is another way of looking, this is on a weekly basis. You can see what a big squeeze we've had. A wave turned positive. Everything looked good. We went from the -2 standard deviation. Now we are outside the +2 standard deviation. So I'll be a little cautious with natural gas. Even seasonality, I went back 18 years, and what we see that October and September, they're pretty positive, as you can see. And now November is pretty flattish. Again, this is based on 18 years. 50% of the time, natural gas is up, 50% is down. And December is one of the most negatives. So just seasonality wise, I would be also cautious with natural gas. All right, next, of course, you know how much I like this expected move. I hope you're using it. You know, putting your targets, putting your stops, if you're doing very short term, if you're using options. See what happened with the S&P. We went to the upper edge, came to the lower edge. NASDAQ, upper edge the same week, came back to the lower edge. What happened with the Russell? Close to the upper edge, came outside the lower edge, came back inside, and closed inside. On the other hand, the Dow was on fire, hit all-time high, went outside, rejected, closed pretty flat. And then we have the 20-year TLT, the bonds, lower, but closed inside. And then what we have, gold had a pretty good week, went outside, but ended up right on the edge of its upper edge of expected move. Silver, on the other hand, was pretty fire and closed actually outside this upper edge of expected move. Financials did go, hit the upper edge of expected move, came back and closed actually a little negative. Energy, again, upper edge of expected move. We see crude oil pretty flat, and then natural gas. This is another way of looking at things. You see we hit the upper edge of expected move and closed back inside. And of course, Bitcoin, after getting a nice boost to the upper edge, came back and way below its lower edge of expected move. I hope these are helpful. And we will move on to our second segment, which is a trade of the week. Thank you very much.